So Nancy, the floor is yours, and we're so happy that you joined us today and giving us your expertise.
Oh, well, thank you. All right, give me just a moment to share my screen, get that up and started. In the meantime, thanks for joining us again. It's nice to be able to talk to you again. So if you are here, I'm assuming it is because you're getting ready to start a business or have a great idea, or maybe have even gone ahead and launched something and are just trying to figure out your next steps. All of that is perfect. No matter where you are in your journey, we want to be able to help make sure that you know what you're supposed to be doing when it comes to taxes. So please feel free to ask questions at any point in time today. You can type in the chat. You can even unmute yourself and ask live if you would like. Since this is a small crowd, we're happy to do that. With me today, I have a guest, someone else from the Indiana Department of Revenue who is here to assist. That is Brandon Matchett, who is on our audit team and is a lot more knowledgeable about a lot of the things that you might have questions about, because he works with businesses like you a lot when he does audits. He sees all kinds of different businesses and sectors and is good at answering a lot of the tough questions you might have. So he will be my lifeline if you ask any tough ones. So we're going to hope to provide you some good general information to help get you started. Please be aware, everything we're talking about with you today is accurate and up to date to the best of our abilities, but sometimes things do change, often without warning. If that happens, we want to make sure that you're not just relying on old slides to provide the information you need. So at the end of the presentation, we are going to give you a way to stay up to date and get new information as it is put out there down the line. So keep your ears peeled for that. So along with this presentation, and I've outlined what we're going to cover here on this slide, I also really recommend you check out the Indiana Tax Handbook for new and small business owners. That's meant to go along with this presentation. It covers the same information that we cover here and gets a little more into the weeds on certain issues even. So that is a fantastic resource. So as you can see today, we're going to be covering a couple of different topics that'll pertain to your business as it's growing and developing here in Indiana. Before I talk about that good stuff, I wanted to give you a little bit of information about us. So the Indiana Department of Revenue, also known as DOR, is a pretty big agency in the state. We have around 700 employees. We have locations all across the state, including one in South Bend. So if you ever want to come visit us in person and ask a customer service representative or an auditor questions, please stop by our South Bend office. They're happy to talk to you. We administer over 65 different tax types, and I'm only going to talk to you about a couple of those today. So we cover a lot of ground. The big thing I want you to know about us isn't actually on this slide. It is that we believe at DOR, our job is not to collect taxes, it is to support taxpayers. It is really important, in our opinion, that you know what you're doing and are comfortable doing it, because the more knowledgeable you are about collecting and remitting taxes, the easier our job is, because that means we don't have to audit or go through the collections process with you as often. So please think of us as your partners in tax collection. That is absolutely how we think of you. Okay, enough about us. Talk about your business. So to start, I will just briefly recap the first presentation that we gave back in February in case you weren't there or in case you just need a refresher, and then we'll dive into new information. So this is, as you can probably tell, a two-part series that we do on business taxes in Indiana. The first part, Start Strong, is meant to kind of cover things that are going to be pertinent to businesses early in the formation process. They'll cover things like registration, a simple overview of a lot of tax types they might need to deal with, how to file and pay those tax types, etc. So one of the things that we talk about in that presentation is how businesses can use InBiz to register their business at the state level. So with the Indiana Secretary of State, the Indiana Department of Workforce Development, and with DOR. Now, if your business is a little further down the line, you've already registered, you don't need to worry about this, you can actually still use InBiz. Even if you've already gone through those steps of registering your business, InBiz is a good resource for ongoing actions you might need to take to stay compliant with some of those state agencies. So for example, when it comes to the Department of Revenue, you're going to use InBiz to register for tax types that apply to your business. And there are a lot of different tax types on InBiz. I've listed 4 of the most popular ones here on this slide. If you've already set up your business, you've already registered for sales tax, you might not need to do anything else with InBiz later on. But if your business changes, you can use InBiz to register for new tax types down the line. So if you open a new location and you've registered for sales tax at your location, but not this new one, you can use InBiz to do that. If you start your business and you have no employees, you're starting small, then later on you're growing, expanding, you need to add employees, you need to register for withholding tax, you can use InBiz to do that. So don't be afraid to check this out down the line. If your business needs change, it is there for you. Another important thing we covered in our first presentation was how to file and pay your taxes, kind of simple overview of that. So I will dive into that as well as some new information. So first of all, if you decide you would like to hire a professional to file your taxes for you, which many new businesses do, we completely understand wanting to have that expert help. That is totally fine. You need to give that person power of attorney. That will allow them to file and pay your taxes on your behalf and for us to speak to them about your account. If you don't have power of attorney for that person you've hired to help with your tax situation, we can't talk to them about your account. It would be a privacy issue. So that is the first step you would need to take if you want to hire someone to help you out. You can do that by filling out a paper POA1 form. Put the website where you can find it, print it out, fill it out, sign it, have your accountant sign it, and then mail it to us. Or you can fill it out electronically. The electronic version of this, called an ePOA, is available on InTime. Once you have an account there, it is very easy to use this. Speaking of InTime, whether you are using that just to approve an ePOA or to file and pay your business taxes yourself, this is a really useful resource. So InTime is a pretty new e-portal that we have created over the last couple of years. It is part of a modernization project that we are embarking upon to update our whole tax system. So that sounds pretty big, and it is big. It's something that has taken us a couple of years to do, and we are not quite through with it, though we are going to be this summer. So in the meantime, I've listed on this slide all of the tax types that are currently on InTime, and there will be just a couple more added in a few months. But for now, if you want to file or pay things like sales tax, withholding tax, if you have a corporation, maybe your corporate tax, things like that, you can do that on InTime. You can create an account. There is a guide that will show you how to do that, and you can start filing and remitting taxes through there. Do be aware, individual income tax is available on InTime, but it is only available for paying. You cannot file your individual income tax on InTime. So this April, when you are ready to file your individual income return and get your refund, please don't try to do that on InTime. That functionality is not there. But that is one of the few tax types that only paying is available, not filing and paying. Just wanted to shout that out in case you saw it on the list and thought, great, I know where to go file my taxes in the next month or two. All right, like I said, most of our taxes are on InTime now, but there are just a couple that are on one of our legacy portals. This is called InTax. So as you can see, these aren't going to pertain to a ton of new businesses, but they might to yours. Who knows? If you are going to be selling tobacco products or special fuel or alcohol, you might need to create an in-tax account and file and pay those taxes on this portal. You'll only have to do that for a couple of months this summer. Like I said before, everything's going to transition over to InTime. So if you are using InTax for any reason, don't worry. We will notify you when that transition point comes so that you can switch over to InTime. All right, so those are our two portals. We do recommend using them. Now I want to tell you a little bit about when you might be using them. So here's the thing. Businesses often ask us when they need to file, and it is not a simple answer. When you need to file your taxes depends on a lot of different things. It can depend on which taxes you're remitting to begin with. Sometimes some businesses have to deal with withholding, some don't. Some have to deal with food and beverage tax, some don't, right? It can also depend if your business is structured and set up as a calendar year or a fiscal year filer. Most businesses are calendar year, but you never know what your business needs are and how you might have set it up. They will have different filing periods as a result of that. Also, when it comes to taxes like sales tax and withholding tax, some businesses are only required to file annually, and some are only required to file monthly. It just depends how much monthly tax you are collecting for those given taxes, and that will determine if it's annual or monthly. We have more information about that in the handbook if you're curious how that might apply to you. But long story short, there are lots of different filing deadlines for all of those different situations. Easiest way to get that information to you, check out the URL that I put on this link. It has a breakdown of different due dates for different tax types throughout the year by month, and then the day within each month when those taxes are typically due. So that's a great resource to find the information that you need. Also, I wanted to mention estimated taxes. So not all businesses necessarily need to worry about this, but if you are a sole proprietorship, a general partnership, or maybe a single member LLC, and your income is reported on federal Schedule C, you might need to worry about this because there's no withholding from a paycheck on that kind of income, right? So as a result, you might need to make estimated payments in order to avoid a penalty. So anybody who has unpaid tax liabilities of $1,000 or more in Indiana AGI or in county tax is going to be required to make estimated tax payments. Now, even if you are one of those kinds of businesses and you're not required to make them, you actually still might want to do it. You might just elect to make estimated payments because some people find that easier to deal with. Instead of paying everything you owe in April or whenever it is that you are filing and paying, you can make those payments structured in smaller amounts over the course of the year. So some people like that flexibility and choose to do it even if they're not required to. The dates I've listed here on this slide, April, June, September, and January, those are the dates for when calendar year taxpayers would pay their estimated taxes. And like I said before, this doesn't apply to every business, but if it does for you, you can set up your estimated payments and make your estimated payments on InTime. So in our last presentation, we talked a little bit about withholding tax and the WH-4s, how those work. I want to take some time now to discuss WH-3s. So at the end of each year, all Indiana employers are required to complete and file an annual withholding reconciliation form. So that is form WH-3. So the WH-3 is, like it sounds, a reconciliation form for the amount of state and county income taxes that are withheld throughout the year. If you have multiple locations and you file withholding at each separate location, you need to complete a WH-3 for each location. Also, a copy of each W-2 that's issued to employees would need to be submitted along with the WH-3. Those are due January 31st of each year, and you can file them on InTime. In fact, you might have to file them that way. Any business that files more than 25 W-2s or similar forms is actually required to file them electronically. So I have provided a website that has more information on how to do that, including a frequently asked questions page and instructions. There are basically two ways to e-file if you need to your W-3s. One is if it is 10 megabytes or less total file size, you can just upload that directly into InTime. If it is more than that, you have to use our secure file transfer protocol because that accepts larger file sizes. If you're not sure how big your file is, I would recommend trying to do it on InTime, and it will alert you if the file is too large. And then you can use those instructions to figure out how to use the secure file transfer protocol. Also, you do not have to do it this way. Kind of like the idea of hiring an accountant, you could hire a payroll service provider to do this for you if you would like. That is something a lot of businesses that have several employees choose to do because it's easier for them. So if you decide to hire a payroll service provider who will do this for you, that is fine. They need to be certified with the Department of Revenue, but most of the major providers are certified with us. They would file your W-2s and WH-3s on your behalf. So know that that is an option as well. Now, let's also talk a little bit about registered retail merchant certificates, or RRMCs. So this is the thing that allows you to make a taxable sale in Indiana. Quick preface, sometimes an RRMC and a vendor's license get confused with each other. They are not the same. If you need a vendor's license, you probably need to contact your county clerk's office to apply for that. We do not handle those at all. RRMCs are the things that legally allow you to make taxable sales in Indiana. So when you register for sales tax, at the same time that you do that, you also get your RRMC. The nice thing is, after you get it, you don't really need to do anything in particular to maintain it. As long as you are in good standing with us, meaning that you are filing and remitting your taxes on time every filing period, your RRMC is renewed automatically every 2 years. Now, as you might imagine, if you have outstanding liabilities, you're not in good compliance with us, then your RRMC won't be renewed, it will be revoked. If that's ever in danger of happening for you, we would send you a letter giving your business warning of that and a chance to catch up on delinquent taxes prior to revoking. So this shouldn't happen without warning. But if it does occur, Indiana law requires DOOR to list online all retail merchants whose RRMCs have been revoked. So that's called being posted. If a business is posted by DOOR, that business isn't allowed to perform the specific transaction type that got them in trouble until the situation is resolved. And that doesn't even officially close the business. The owner would still need to go through the proper channels to do that. It just functionally makes it impossible for you to legally do what you need to do. So this is basically the last step as far as getting those liabilities resolved with DOOR goes. We really recommend you never let it get to that point, and you never will as long as you are filing and paying your taxes when they are due. Even if you ever did get in that situation, you can reestablish an RRMC. You would just need to get back into compliance, maybe set up a payment plan if you needed that, and then we would be able to help you reapply for your RRMC. So know that that is an option if the worst was ever to happen. All right, so this topic, remote sellers, has some potential impacts on anybody who's doing businesses across state lines, which is a lot of businesses, particularly any business that does operations online. So there was a Supreme Court case a couple of years ago, South Dakota v. Wayfair. And as a result of it, a few things changed in 2018 around that time. For example, if you had a business and you frequently made out-of-state purchases, maybe because you purchased online or through mail order or something like that, you probably noticed around that time period that a lot of those purchases suddenly became taxed when they weren't before. That is because as a result of those South Dakota v. Wayfair decision and those rules that followed as a result of that, Indiana implemented some new laws for sellers located outside of the state. So a retail merchant without a physical presence in Indiana, and a physical presence means a location in Indiana or employees in Indiana, anything like that. So a business that doesn't have that, it's completely outside of Indiana. They are required to register and collect Indiana sales tax if they meet either of these two thresholds. One, their gross revenue from sales into Indiana is more than $100,000, or two, they perform 200 or more separate transactions into Indiana. So, as you might imagine, the business does business into Indiana, but it does it really infrequently. It might never meet those thresholds, so it doesn't need to worry about this. But once it does, it needs to register with us. And then anytime it does a sale into Indiana going forward, it would need to collect sales tax, Indiana sales tax for that purchase, and then remit that sales tax to Indiana. So a lot of times when we tell people about those rules, they ask, okay, I get that those are the rules for businesses outside of Indiana, but I'm a business in Indiana. So how does that impact me? When I make sales into other states, do those same rules apply? And I wish that I could give you a simple answer, but I can't, because not all states have implemented the same rules that we have. Some are similar, but have different thresholds. South Dakota's is exactly the same because we implemented our rules to mirror theirs. They were the one involved in the Supreme Court decision, so that was logical. There are some states that don't have any rules in place at all about remote sellers. So it can get complicated. If your business is going to be doing sales in a lot of different states and you're worried about keeping track of all those potentially different rules, I would recommend maybe checking out the Streamlined Sales Tax Program. So this is not our program. It is a third-party program, but we do work with them to provide them information. So this website, even if you're just checking out the website, it has information about those remote seller rules for other states. Click on that link, it will give you a frequently asked questions page, and you can see different states and kind of a brief breakdown of what those different rules are when you're selling into them as a remote seller. You can also officially join the Streamlined Sales Tax Program if you would like. So that is not free. I cannot tell you what the cost is, I'm not sure. But it is very helpful if you're going to be doing a lot of business in a lot of different states, because they will help you keep track of all the states you're selling into. When you meet those different thresholds, they will help you get registered in the states where you've met the thresholds, and then they will help you remit tax to those states when you make sales with them from there on out. So that's very helpful. Just something to think about if you need it. Along with remote seller rules, another thing we want you to be aware of is the impact of marketplace facilitators. So marketplace facilitators are businesses or people who own, operate, or otherwise control a marketplace, and they facilitate a retail transaction in that marketplace. If you, as a business, are selling your goods out of state through a marketplace facilitator, and some examples of that would be Amazon or Etsy or eBay, you don't have to worry about collecting and remitting sales tax for those sales, because those platforms are considered marketplace facilitators and they handle that for you. So if you use something like Amazon to make your sales, all those rules I just told you about in the last slide, you probably don't need to worry about it. I would highly recommend do not assume that a platform you work with is a marketplace facilitator just because it sounds like one, because I've given you a very simple definition, and there are infinite numbers of potential websites and entities that kind of sound like they could be a marketplace facilitator, but who knows if they are or not, right? If you're unsure, I really do recommend verifying that that entity is collecting and remitting sales tax on your behalf. Ask them. They should be able to tell you. And also, even if they are, keep track of those sales you make through those entities, because you need to have a record. When you remit your taxes to us, you are going to note those sales. We want to know what you owe versus what those facilitators owe. So it is still on you to track those sales. All right, so that was a brief rundown of remote seller and marketplace facilitator rules. If you have more questions, we do have more information on those 2 pages of our websites that I linked on these 2 slides. So please do check that out if you need more information. The next thing I wanted to talk to you about is use tax. So while most businesses have a pretty good understanding of things like sales and withholding and a lot of the other very common business taxes they are often expected to file, there is one tax type that businesses are often not as aware of as they should be, and that is use tax. So use tax is kind of like the complement or the other half of sales tax. If a seller does not collect tax from a purchaser, but the purchase is otherwise taxable, the purchaser is responsible for remitting use tax to the state. Now, use tax is 7%. That is the same rate as sales tax. So the way this works is if you buy something and are not charged sales tax, but should have been, the way you make that right is you still remit that same amount that you would have paid if you just paid sales tax during the sale, but you do it a little later on once you've realized, and you call it use tax. So that is the definition. But I think if you've never encountered this before, it can be kind of hard to wrap your head around what this is, when it could come up. So I'm going to give you some examples. One example would be if an item is purchased exempt, but then that exempt purpose no longer applies later on. So let's say you were an office supply store, you buy a ream of paper from a distributor, and you buy it as inventory. So that means you are going to resell it in your store later on. Now, in the state of Indiana, inventory you can claim an exemption for inventory. So you would give that distributor an ST 105, which we talked about a little bit in the last presentation, and they would not charge you sales tax for that paper because you're going to be reselling it. So let's say you do that, and then later on, before you can resell that paper, your office copy machine runs out of paper. You don't have any, so you go to your inventory and you take that paper and you put it in your copy machine. You use it for business use. Now that is okay, you can do that, but in doing so, you have reclassified that paper. You have changed how you are using it, and the exempt purpose no longer applies. If you had known how you were going to use that paper when you originally bought it, you would have had to pay sales tax. You didn't. So the way you make it right is you take 7% of what you paid for that paper and you call it use tax and you remit it to us once you become aware of that discrepancy. Another time that this can happen is if you purchase from a vendor in another state who isn't registered to collect Indiana sales tax. So if you don't see sales tax on an out-of-state sale, you're looking at your receipt, you're looking at your invoice, you do not see Indiana's 7% sales tax, that is a good hint to you that you probably need to remit use tax to us, assuming you know that that purchase is otherwise taxable. And like we just talked about, one reason that some vendors might not be registered to collect Indiana sales tax is because of those remote seller rules. Maybe they haven't met that threshold yet, or they have and they just didn't realize that they're supposed to do it. So Sometimes businesses, when they encounter the idea of use tax, they kind of ask us, well, how can you, the Department of Revenue, even keep track of us when we need to do that? Do I really need to pay it? They will ask us. And yes, you do. That's why the laws exist and are written the way they do. Here's why we recommend you do it. Most businesses need to pay use tax at least occasionally. So if your business is operating in Indiana for multiple years and you never remit use tax to us, that is going to look a little unusual, and it could flag you in our system for a potential audit. And at that point in time, we would go through your records and be able to see the instances where you probably should have remitted use tax to us. And we will ask you to remit it to us then, along with a penalty and interest. And you don't really want to do that. So it is in your best interest to remit use tax to us when you become aware that it is due, instead of waiting for us to find out about it later on. Now, it is pretty easy to remit to us. Businesses that are registered for sales tax can report any use tax that's due on their monthly or annual sales tax return. So that is Form ST-115. You're probably not going to remit a paper version of that form. You're going to do it electronically through something like InTime. You can also use, oh, forgive me, the form I meant to say was 105. That is the monthly or annual sales tax return form. ST-115 is actually specifically just for use tax, and it doesn't have an associated due date along with it. You can use it to self-report any use tax due as it comes up. So if your business is an annual filer, you don't have to wait a whole year to remit use tax to us if you become aware of owing some right after the last time you filed. You can submit it through this form instead. And just like the ST-105, the ST-115 is available online electronically through InTime. So it is easy to remit use tax to us basically whenever you need to. One more thing I wanted to mention about use tax. So when you're dealing with those out-of-state sales, use tax can get a little funky. Here's the breakdown. Indiana use tax rate is 7%, same as our sales tax rate, right? In the instance of goods that are purchased in another state where sales tax is less than Indiana's 7% rate, Indiana's use tax due would amount to the difference between that other state's rate and Indiana's 7% rate. So you can see the breakdown of this on this slide. If you pay sales tax of 7% or more to another state, you don't owe anything to Indiana. Don't have to worry about it. But if you pay sales tax that is less than 7%, let's say 6% sales tax to another state, because that is their rate, you will pay that, and then you will pay the difference of 7% minus 6% equaling 1%. You will pay 1% use tax to Indiana. That is what would be owed. So just be aware of that little issue as well. Those are the basics of use tax. So I wanted to also spend some time talking to you about what the collections process looks like, how to potentially appeal a bill if you ever need to, what audits are like, and how to keep good records in order to hopefully prevent any of those things from happening. Because knowledge is power. We want you to understand how our systems and processes work. First of all, it is really important to file and remit taxes owed on time every time. If you don't do that, it can result in your business entering our collections process, and the later stages of that can get pretty severe. It could potentially hurt your credit score, cause you to be issued a sheriff's tax warrant. You could be referred to a collection agency, or like I mentioned earlier, your RRMC could be revoked. Like I said, those are kind of the last stages in our collections process. So we really recommend never let it get to those stages. So here's what happens earlier on in the process. First of all, just want to once again say, we really recommend that you always file a return when it is due. Now, that might sound kind of obvious, but there are situations where businesses don't realize that they need to file, even though they have come up to the due date of a filing period. So, for example, with a new business, when you register your business on Inviz, one of the things it will ask you is when you believe you are going to be starting to remit sales tax to us and how much you expect to remit to us. So if you're very ambitious and you say, I'm going to begin remitting sales tax to you in April, but then your business does not actually get off the ground and start making sales until June or July, you also find out that you are estimating you're going to be collecting enough sales tax that you are going to be a monthly filer, your business will be. So it is okay for you to not collect any sales tax during those couple of months, but you told us you were going to be filing during those months. We're expecting you to file. So what you need to do is you need to file. You need to tell us that you have nothing to remit to us. You're going to file a $0 return. If you do that, then we will understand what's happening and you will be good. If you don't, we will assume that as a new business, whoops, you missed your filing period. You didn't realize that you had to do that. And we would send you an estimated bill. So you don't want to deal with that when you're just starting out and you haven't even collected anything yet, right? So if you file every filing period, this shouldn't be an issue for you most of the time. Here's a simple rundown of the process though. If you fail to file, like I just talked about, one common reason why that might happen, it will generate a letter notifying you of a delinquency. If you don't respond to that promptly, we're going to send you something called a notice of proposed assessment. That is the estimated bill that I mentioned earlier. You have 60 days to respond to that. During that 60-day period, you can pay or you can protest. But if you do not do anything within that window, that is going to mean you get something called a demand for payment. So at that point, you have no ability to appeal. You just have to pay or set up a payment plan. And you only have 20 days to do that. You don't do anything within those 20 days, then a tax warrant and some of those other things that I mentioned in the last slide, those can kick in. So if you ever get a bill and it is incorrect, you can always protest it as long as you're within that 60-day window. So you can do that by sending a written request and a copy of the bill to us within 60 days of receiving that bill. There are some requirements about how that written request looks, how things should be formatted, what information you need to include. So I am including here on this slide our protest guide that breaks all of that down, helps make sure that you do what you need to do if you're protesting. Also, you can always, if you get a bill, pay it. You have several options for how to pay it. Probably the easiest one is to pay electronically through InTime. If you are doing this, you need a copy of your bill. Don't throw the bill away, keep a copy of it because that has information on it like your case number, your tax identification number, your liability number, the payment amount. Those are all helpful when you are paying your bill. You do not have to pay electronically. You can pay by mail. If you want to send a check or money order to us, you can send it to this address here. Please make the check payable to the Indiana Department of Revenue. We also, like I mentioned earlier, offer payment plans. So if you owe something and you cannot pay the full amount by the due date, set up a payment plan. Generally, you need to owe more than $100 in order to qualify for a payment plan, but as long as you meet that threshold, you can probably do it. You can contact us, get our help setting it up, or you can go into InTime if you already have an account on InTime, log in. If you don't, set up an account, and you can set up a payment plan yourself without having to get on the phone with us. So Either way is fine with us. I also wanted to give you some information about what happens if your business is ever selected for an audit. So audits can be pretty frightening to a lot of customers, and one of the reasons for that is they just don't know what to expect, and your mind will always gravitate towards the worst possible outcomes if you're not sure what's going to happen. So we created something called the audit manual to help provide more information. This is something that we generated to help train new auditors. It was an internal manual. We decided to make it available to the public because we want things to be transparent. We want you to understand how the audit process works. So this is a pretty lengthy document, but it breaks down exactly what happens in an audit, what to expect, what your auditor brings to the table, what you do, what kind of documentation you're expected to provide, lots of good stuff. I will give you kind of a brief rundown of what's in that manual on this slide and the next one. So if your business is ever selected for an audit, you are going to get a letter in the mail letting you know. You can work with your auditor to schedule it at a time that works best for both of you. Right now, the vast majority of our audits are being conducted electronically, so know that that is an option if safety is a concern for you. Once your auditor is ready to start, the first thing they're going to do is actually sit down with you and ask you a bunch of questions and have a conversation. They are going to need to know how your business works, products and services and inventory control. They're going to ask about the accounting for your taxes and your financials. They are going to ask about any business changes that happen during the audit period, because in order to audit your business, they need to know how it works. And then they are going to ask for your records. So they are going to review them, potentially conduct statistical sampling if they need to, identify any potential issues, and then they will finalize an adjustment. Now, all of that usually takes 3 to 10 days, though that amount can depend on how good your records are, how comprehensive and well organized they are. Once your auditor is done, they are going to again sit down with you and have another conversation. There, they will talk to you about their findings. If you want, you can have someone represent you at this meeting. If you'd like to have an expert there on your side, just make sure that you have given them power of attorney. You can also have someone represent you at any point in the audit process. But again, please make sure they have power of attorney if you choose to do that. And if you disagree with the findings of an audit, just like when we send you a bill, you have the right to protest it. And the process for how that works is pretty much exactly the same. You have 60 days from when they tell you the findings. You can use that protest guide to help guide you through the process of protesting the audit finding. I wanted to give you a couple of the most common reasons that our auditors have told us they make adjustments when they audit a business. And a lot of these things are things we've already talked about. So use tax issues, primarily just not reporting use tax at all, or maybe not doing it right. Making exempt sales, but not keeping exemption certificates, so not having good documentation, not reporting sales and income correctly, and you could read the rest. So we're providing this because we want you to know what kind of issues tend to come up with businesses in audits, so that hopefully you can be prepared in advance so that your business is never going to fall victim to these issues, because you're doing what you need to do. You're remitting use tax when you need to. You're keeping exemption certificates. You're keeping good records. If you're doing that, it can honestly help you never get audited in the first place, or at least make sure that if you ever are, you're prepared for it and it's going to work out in your best interests. I also wanted to mention there are a lot of different outcomes to audits. It is not always the kind of thing where your auditor comes in and they tell you, you owe a lot of money. In fact, I would say that is not usually what happens. There are lots of potential situations that can occur. Sometimes your auditor will find that you've done everything right. No adjustments need to be made. Sometimes they'll find that a small amount needs to be remitted because something was wrong, but they will also help you make sure that you don't make that mistake again. And sometimes your auditor will find that you've overpaid and that you are owed a refund. That does occasionally happen. So please keep that in mind. Ultimately, our goal in an audit is not to collect the maximum amount of taxes possible from our customers. It is to administer tax laws fairly, securely, and efficiently. So we all have the same objectives when it comes to audits, making sure that the right amount of tax has been paid to the state, no more, no less. If you go into it with that in mind, it is not going to be nearly as stressful as you're probably imagining. So I have harped a lot now in the last few slides about keeping good records. Here's some information about how to practically do that. In the state of Indiana, you're generally going to want to keep records for at least 3 years because that is how far back our audits tend to go. 3 years from the date of the filed return. Keep in mind, this is only for businesses that are actually filing their returns. When we encounter a business that is not filing at all, then open statute comes into play and audits can go back pretty much indefinitely. So hopefully that will never apply to you because you are filing your taxes. Here are the kinds of records that we recommend you keep. Just a couple of examples of types of documents that your auditor might ask for based on the types of audits that they conduct. So you can use this information to make sure you have what you need well before an audit, or even if you never get audited at all, these are still good things to hang on to. So in sales and use tax audits, we are often looking for things like ST-103s, sales invoices, exemption certificates, etc. When it comes to withholding tax audits, we are looking for Indiana WH-1s and 3s, W-3s and 2s, payroll summaries, and so on, anything that shows that withholding tax. And then income tax audits, we're looking for federal and state income tax returns, the schedules that go along with those, and a couple of other things. Now, these are just a few examples. Check out our audit manual if you want a much fuller breakdown of different types of records that are often requested in different audits. And then just to bring the mood down a little, I know that you're likely just starting your business. You do not want to think about closing it, but it is important for you to know how to do that correctly to make sure that if that ever happens, we are aware and we don't send you estimated bills because you've stopped paying us but haven't given us any notification your business is closed down. So we assume your business is still open and you have just missed your filing periods, right? You don't want that to happen. So if this ever occurs, you can close your account by using Form BC-100. You can either print that out and mail it to us, or you can e-file it through InTime. Also, be aware, closing your account with the Indiana Department of Revenue does not end your obligations to any other agency. You may still need to notify other agencies of your business closure if that occurs. We recommend any entity that you registered with when you started your business. It's a good idea to reach out to them and let them know that you are closing. So that could be things like the Secretary of State, Department of Workforce Development, any local government entities, the IRS, any of those places. If you registered with them, let them know that you're closing. They will have different things they ask you to do as a result. The BC-100, that is just what we ask for you to do. All right, before we wrap up, I wanted to give you a couple of resources that are available to help you as you grow and develop your business. So these are a few sections of our website that are particularly useful. I'm going to point out the second bullet point in particular, that is our tax library. So we have a lot of official guidance documents that our legal and policy teams have put together. They're often called income and sales tax bulletins. departmental notices, and things like that. And these cover a lot of different topics, different tax types, different business sectors, different issues that come up. And they get into the weeds about how the taxes work in all of those different instances. So if you ever have a question about how a specific tax type works or something like that, check out the tax library, see if there's an information bulletin on that topic. There is a decent chance that there is one, and there's a lot of good information within there. So please check those out. If you want to get updated in case anything changes down the line, here's how you do that. We're going to sign up for Door email updates. So you can go to our homepage, scroll down just a little until you find a blue box that says subscribe to Door email updates. Click on that, enter in your email address, and then you can select from different categories to let us know how you want to be updated. So I would highly recommend, if you're in this presentation, you select these categories. Businesses, because you're a business. Agency announcements, because that will give you a ping anytime we send out a press release. So that's usually very big ticket items. And then the last one is the tax bulletin. That is our monthly e-newsletter for businesses and tax practitioners. Has a lot of useful information, and it only comes out once a month, so it won't clog your inbox, but it will give you good updates and information as they are pertinent to you. Two other resources I wanted to mention that aren't ours, but are pretty helpful. The first, if you have any questions about anything at the federal level, please remember the IRS website is a good resource. Now, it is a little hard to navigate, in my opinion, so this is the area of their website that you want to go to, the small business and self-employed section. That is pretty much where everything you want is going to be found. So look at that if you have not already. Also, remember our presentation today was focused on Indiana. So if you want to find out how state taxes work in other states, I recommend you check out the second link on this page. That also goes to the IRS, but that page includes links to every state, all 50 states, plus I think Puerto Rico and Guam and whatnot. It goes to that state's revenue agency, and it also has links for businesses that are doing business in those states. So if you have questions about Ohio or California or Florida or Guam, that is probably a good resource for you to check out. That will help you make sure you are going to the right place to find the information you need for those areas. And then do not be afraid to reach out to us after this presentation. If you have questions down the line, we're happy to help. So the phone number in the first bullet point, that is our business tax line. We are always happy to help you over the phone. Be aware we are entering tax season right now. Actually, we're not even entering it, we're in full swing, which means our phone lines are getting busy. If you want to avoid a long wait time, I recommend calling us early in the day. Phone lines open at 8 a.m. on weekdays. That is the Eastern time zone. Call early in a weekday and you will not have as long of a wait time usually. You can also, if you have an in-time account, you can send us a secure message directly there. So that is a great way to ask questions because our customer service agents, they can see your question and it is tied to your account. So they can very easily pull up your account and look at the thing you had a question about and get back to you with an answer very quickly. Great resource, check that out. You can also visit us in person. I mentioned there is a South Bend office, or you can come down to Indianapolis and visit us. Regardless, check out the link in that third bullet point. That has a place where you can make an appointment to visit us in person. We recommend you do that. That'll help make sure you see us at a time that you actually want to instead of waiting in line for a while. And it'll help us make sure we can keep our buildings to a minimum number of people at one time, keep everybody safe. So visit us in person if you would like. We're happy to talk to you. That is it. So thank you so much for your time and attentiveness. We're really happy to be able to talk to Notre Dame students and help give you the information you need. I have no doubt you're going to go do great things. So good luck with your business. And in the meantime, we have just a couple of minutes remaining. So if there are any questions that have come up in the chat or that you've been holding on to, please feel free to ask them now.